Good day, everyone. It's Dr. K coming at you along with Gil Morales. And we see we are in an uptrend, a continuation of this sagging uptrend that started early this year. But nevertheless, this uptrend seems like it is quantitative easing motivated. And we are in the throes of QE3 with all the central banks continuing to print money. And Bernanke basically saying that the economy needs to improve before they're going to slow QE, and there's not enough evidence that the economy is going to improve when people think it's going to improve. So it's very possible that this full-blown QE3 might continue not until October, but through the end of the year. And as we've seen with QE1 and 2, the market tends to go into a pretty good uptrend during those periods. And right now, we did see a fairly strong uptrend in the S&P starting in mid-April, ending in mid-May, when Bernanke made the point of slowing QE, and that was kind of a shock to the markets because that was newspeak for Bernanke to basically go in and say, yeah, this QE's got to stop. So we had a high volume reversal on the 22nd of May. And the market had a correction, a pretty mild one, just over 5% on the S&P 500. And since then, has launched into a new uptrend whose ascent is about on the same pace as the one between April and May. So the question is, will this ascent continue? If so, it's going to play out like QE1 and QE2 have done. And we're seeing also ample evidence on the part of leading stocks. Some of the internets, like Amazon, have done well, hitting new highs. We see certain biotechs are coming back around again. BIIB, that's Biogen, is sitting around its 50-day after undercutting it. Regeneron, RGN, that's coming up through its 50-day. We see various, where is it here? I think it was, yeah, eBay. eBay's coming back around. These are stocks that are old-time leaders. They're quite mega cap in their size, and they're not going to blow the doors off the race, but they're slow and steady. And the fact that they're coming back around and some are hitting new highs obviously bodes well for the internal health of the market. So at this point, the market direction model is on its buy signal, and it's going to be either more nimble in this market environment, or it's also going to allow for greater correction. That sounds like a contradiction, but depending on the context of where the market's serving us, it's either going to choose to be nimble, or it's going to choose to give the market a little bit more corrective room should it sense the need to do so. And as far as precious metals, we don't really have anything to say on them. They're in the midst of their correction. Commodities are, in general, have been in a downtrend, and the question is, if the economy of the world starts to improve, then that'll exert demand on commodities. That should bode well for the price of commodities. But the flip side of that is, if the economy improves, then QE is going to slow. And this is true of not just the Fed, but also central banks like the Bank of England, the Bank of Japan, and the ECB. Over to Gil.
Yeah, let's see. Here's what I'm looking at right now. We've got, last week we were talking about this trend line breakout. I think I actually drew this line last week. And you see the trend line breakout occurs on increased volume. That was on a Friday. That was wedged between July 4th holiday and the weekend. And so volume you would expect would be light, but it was heavier than the prior day, which was the day before July 4th, and obviously was going to be lighter because it was a half day of trading. But in any case, you get this technical move. Sometimes there are some guys I've talked to, some traders, who tell me that they don't look at volume. They just look at price. They think price is all you need, and there is a school of thought that believes that volume doesn't matter. And so, so you might play around with your charts and just look at them on the basis of price and forget the volume and see what happens. And a lot of that has been seen in this market environment. We've seen rallies go where the market goes on no volume. Like here, let's look at the low back in April. Lighter volume on the first day off the lows, second day lighter volume. Next day pick up a little bit of volume. but not, not real heavy volume. It's not till you get up here that you see some volume, and then you pull back. After that, you stall a little bit, and then you pull back at resistance up here around the 3,300 level on the Nasdaq. So, these rallies can get going, and they will extend higher on lighter volume, but they go, And so I think when you see the signals, last week's trendline breakout here was probably telling you that the market was going higher. The other thing is on Friday, well, in fact, most other sources didn't really talk about this at all, and we mentioned this in our Monday pre-market report. The Russell 2000 on the IWM, that was a new closing high on Friday, which is kind of interesting. Now, the one thing that powers the Russell 2000 is a lot of these smaller financials, these little banks like M&T Bank, this other one. There's a whole bunch of them. But they've been doing better, and I think the reason for that is that spreads, interest rate spreads, are working in their favor, because what it looks like is the long end. If you look at, let's look at these different ETFs. So the IEI, well, no, let's do the SHY first so I can keep this in nice yield curve order. But the SHY, the 1 to 3 year Treasury bond, has had a rally off the bottom, and then it rolled over on Friday, but now we're making a higher high here, so that's acting better. The IEI is a 3 to 7, and that has tried to make a higher high, but it's reversing here at resistance on this dead cat bounce, and it broke down on Friday to a lower low. But the TLT now is way down there, and all it did is run into resistance, really at some, in this area here above 108 on the TLT, and now it's coming back in. So you can see on a relative basis, the longer end of the curve is what's getting hit the most. And so what you have going on is long-term rates, intermediate to long-term rates going higher, short-term rates kind of staying low, and the Fed is promising to keep them low. So the spreads, banks borrow short and lend long and make a spread, and so that seems to be improving for the small banks. Maybe it induces them to lend more, or loans become more profitable for them so they can do that. And so I think that's what's been driving the movement in small banks. And I think if you were very alert and very savvy when it came to understanding the yield curve and how it might play out, then you could have figured out that it was positive for these banks. Because I remember seeing MTV come out of here, and you had a pocket pivot right here off of the 50-day and the 10-day, coming up to, off the 50-day, which is the blue line here, and through the 10-day. And so, I saw that, and I'm always skeptical of banks. Yeah, I don't get excited about banks, but the bottom line is this thing went from 104 to over 118, so about a 14% move over the last 2 weeks or so, or say 3 weeks or so after this pocket pivot here. So, I saw a bunch of these, but we weren't all that, excited with them because of the fact that we don't really, we don't understand that area as well. We're growth investors, and so banks we don't necessarily consider growth stocks. And I do think, though, other traders who are more savvy when it comes to understanding the banking system might have looked for this. And remember, we try to empower you guys by teaching you things about pocket pivots and viable gap ups and whatnot, and how you handle your risk. So if you had seen this, you could have taken a position. It's not like it rewarded you right away, because it did back down to the 50-day a couple days later. But it did eventually come out of there, and you could have even bought this one. But this is also a pocket pivot, and this is kind of a little range breakout here. So that looked pretty good. So it could have been played. And I would encourage those of you don't always listen to us. If you see something happening, go for it. And you can put on the trade with a reasonable amount of risk and understanding where your out point is. I don't see why any trade that you see that fits some of the parameters of a pocket pivot or a viable gap up, I don't see why those are not viable. I think you can plan. Go for it and see how it works out for you. The differences of opinion is what makes a market. So I would say, just because we don't bless it, and we've said this many times before, doesn't mean you can't play out. But anyways, that's what I see going on in the bond markets, how it's playing out in these small banks, which a number of you have mentioned before. I think what you're seeing in the Treasury markets, the long end getting hit the most, because the market sees it, 1, 2, 3 years out, the Fed's probably definitely going to be pulling back on QE one way or another. And so it's hitting the long end the most. In the short term, probably rates stay low, and so the 1 to 3 and the 3 to 7 year ETFs are showing less movement, or let's say better bounces off of the recent lows of a couple, 3 Mondays ago. I'm going to say about almost 3, 4 weeks ago. anyways, what am I seeing in the market? There's been some trades. You know, again, I'm active here, and I move around. I'm trying to anticipate some movement in stocks and trying to understand what some of the themes are. I think one of the things to watch out for here, let me pull this guy out of here, is that, yeah, okay, you've gapped up through, let's see, where's my handy-dandy pencil? There he is. You've gapped up through this prior intraday high. You know, you made a new closing high yesterday. How about line? Settle down there. Well, not perfect, but close enough. And it gaps above it. So now IBD goes to a market on an uptrend here. The market direction model, I think, prudently went to a buy signal in here, and so that worked out a lot. In fact, I think it was this day right here. So we got some cushion there, and that's a better position to be in than telling everyone to be coming into the market here. I think there is potential for some of these stocks that have come up off their bases, and of course, Dr. K mentioned something like an eBay, and you know, look at this. Don't be piggy if you own some of these things and you're in heavy. I definitely cut positions and take profits on the way up, especially when you see a streak like that, because this is not generally going to go on. Come on now, there we go. Not going to go on forever. So you know, it makes sense for this to pull back. You can see, like in Trulia, you had a pocket pivot here, a bottom fishing pocket pivot. Here it comes up the right side. No real volume here. You had some volume in here. I think that qualified as pocket pivot volume, but it's way up from the 10-day. But see, now you're up at the peak here. So you're in a position where it makes sense to pull back. So I would say overall, don't feel like you have to rush into the market and start buying everything all over the place because you need to be in right now. I think look for some weakness, look for a pullback potentially up here and see how far it goes. Now, I think, you know, with the MDM, with the market direction model, being in here puts us in a good position to weather a pullback here because I think you may pull back down into this area here, maybe into the gap or maybe fill the gap. So that's a possibility. So, you know, stay nimble and don't, you know, try to use, I would try to use weakness in strong stocks, okay, as they're pulling back in a market pullback here, which I think there's definitely a possibility. You're seeing it right now. So, you know, the way this market operates, when it gets too obvious in one direction or another, it tends to want to move back the other way. That's just kind of been the QE bizarreness, you know, underlying the whole market. So, my view is, if you run some of this up, you know, and if you guys have been in the chat room, I've been talking about some of these names coming off the lows, and you have some profits, and they run into, you know, the peaks of bases. So let's do a little cleanup here. So they run, you know, like run up in areas like that. Then you want to take some profits. I noticed LinkedIn, it had a pocket pivot. Dr. K, I wanted to ask you a question. Was this not was this off the 10-day, or do you see this more as a little breakout type pocket pivot?
That's more of a breakout type. Though you could be forgiving and say that since you know, it had a 2-day constructed pullback and then launched, technically that could be a pocket pivot.
Yeah. So it actually, yeah, and it's held above the 10-day. The one thing to notice here, though, is you've had here's the lows, I believe, off of that Monday low where we bottomed out, and you've run up a bit. Now you're up towards the 200 level. To me, that's potential resistance. So if I was playing a trade on this, which I was, and it runs up into 200 level, I kind of watch it here, and I'll just sell it and back away and see what it does from here, because it would make sense for it to back and fill a little bit. But that's what you're seeing in a lot of patterns, and so I think, you know, expect a pullback here and be opportunistic. I think that will work for you, and I would not be piling into stocks willy-nilly unless something is at a low risk situation, so, or in a low risk position rather than its chart. Dr. K, I got a question for you here.
Yep.
This is actually an old question, but I'll let you answer it again. Can you utilize pocket pivot concepts on an intraday basis, say a 5-minute chart, to gauge intraday direction on a stock?
It's not something I found works that favorably. So no, I would use pocket pivots for daily charts only.
Yeah, you guys already know on an intraday basis, we look at stuff like, you know, you see this pullback in Celgene, and now you're getting a 620 buy signal. It's if you wanted to buy this, you know, on the basis of the viable gap up, you know, this on the pullback, this might be an entry point that you could consider. This is one way that I'll use these charts. So now I'm seeing a buy signal, so I might, you know, buy some of the stock in here and see how that goes. But that's how I would that's how I use it to time buys, depending on the context of the chart. So in this case, let's put this together with the daily chart. In this case, the daily chart shows you a Bible gap up. The low is 131.67. So you know it has a potential to pull back down towards that low, maybe even a percent or two below it. So as it's pulling in, you don't know which day it's going to find support and then head back the other way. So the way to optimize, at least the way I look at it, is to use this chart, watch the pullback, watch the pullback. Now here you go, and now you're starting to get the 620 cross. I think the way Dr. K would operate this is where your cross occurred, and you'd look for a move above this peak as a confirming signal, and it looks to me like that's what you're getting right now. We'll see if it carries through on the day. But see, that's where you could start coming in and building a position on it if you didn't buy it yesterday, with the idea that it's going to hold above or within 1 or 2% of this intraday low. My thinking is if this is a strong viable gap up, then this thing shouldn't come down too much. So, but that's one way I use a 5-minute chart. It's my 620 chart. Dr. K has his crossbow chart, and that's one way that we use it for ETF entries, and I use it also on stocks. But I originally came up with this chart as a way to cover shorts and tell me when to cover shorts on a intraday basis after they've come down. So, but again, I want to emphasize that I use this chart in conjunction with the context of where the stock is on the daily chart. So understanding that it could have a pullback, you know, I look to be buying into this as it turns, and hopefully if I'm able to buy in there, that's pretty low risk. You're about 2% above the low here, so your risk is pretty low, I think, coming in here, and you can use this chart. So that's my answer to the question. But we don't, you don't use pocket pivots on 5-minute charts. Let me see here. What do we got here? Some other stocks that I'm looking at I want to talk about. First Solar I think is interesting. It's trying to pop out of here. It's got to trade over 5,001,000 shares to get a pocket pivot coming up through the 50-day. And I was talking about it in here yesterday in the chat room. It was around 46, I think, a little under. And it's hanging out there. And I said, keep an eye on this one. It's starting to move up. The volume's up today, I believe. I don't know what the volume is. Offhand, it's up 25% above normal. But so far, as you notice, it's running into some resistance at the 50-day. So I really want to see it clear, and I want to see the volume be, well over 5 million shares, frankly. So I think this is something to keep an eye on. We've seen this action in Solar City, where it had a pocket pivot right here above the 10-day. It's already holding the 50-day on the pullback. And now it's continuing higher. Got another pocket pivot here, and it's holding up. To me, this looks like it's going to round out and try to go higher. But it could back and fill in here, especially if the market pulls back. So you want to watch for that, and I think you want to watch for a pullback into the 10-day moving average as an entry point if you're not in it already and haven't built up a profit cushion in the stock. So I think this one looks pretty good, and the group in general is confirming the overall strength in the group. SunPower is the leader. You had a pocket pivot right here actually, coming up through the 10-day. It's a little V-shaped, but notice how it works. And I think the reason is you got a double bottom here. And remember, when we saw this, I told you guys it's probably a shakeout plus 1.5 plus 2 situation. This is a couple of weeks ago in the webinars. You can check that, the webinar 2 weeks ago. And the stock's just continued higher. You had a little pullback here. Didn't even get down to the 10-day line. I thought it might, but it didn't. It's moving higher. Stalling out up here, but it's had a nice run, so I'd expect it to pull in. Watch how it acts coming into the 10-day moving average. You see the market's coming off a little bit more. So, I think it's doing what it needs to do, frankly, up at these levels. Let's see. Pushing through some other stuff. We've looked at some of these other names, LinkedIn, or rather not LinkedIn, Tesla. And Tesla making a new high here and continuing higher and not really paying attention to the market pulling back right now, frankly. Nasdaq's still up a little bit, as you can see, up 0.29. But Tesla goes into the Nasdaq 100 on Monday, and effective Monday. Is that right? 12:30? Yeah, that's right, on Monday. And so everybody's piling into it. It could pull back. I'd watch for a pullback into the 10-day moving average. So for now, it seems to act fine, and I don't see any real issues with the stock. Other than that, you're making new highs on the low average volume, which to me tells you that demand could be artificial right now based on the fact that it is going into the Nasdaq 100 on Monday, and therefore they could finish that buying out. I'm not sure how that works exactly. Hey, Dr. K, do you know any index fund guys and how they do this, and when there's a change to the indexes and they have to reallocate out of one name and into one that's being added? You don't have any concept about concerning that, or how someone might operate?
Yeah, not enough to actually state. I don't want to state a view without being really certain about it.
Yeah,
So
yeah, I feel the same way, because if anybody knows, maybe you want to tell us and we'll spew it out here on the webinar. But my guess is going into that day they're buying it, and that's why you've probably seen a consistent bid in the stock. Because yesterday, even though the market was gapping up, Tesla gapped up over 125, and then I think it came right back into 122. It was roughly flat on the day, and then from there it turned around and went higher. So you see a bid in there. Whether more sellers choose to take advantage of the bid and take some profits in the stock is another question. So, it's really hard to predict exactly what it's going to do. But I would point out that making new highs on lighter volume or below average volume when you're in an extended position, you want to be careful there, and you don't want to be buying it up here. I would be looking for a pullback, either into the 10-day or even back. Potentially, let's say the market did correct 2 or 3% in normal pullback after running sharply off the lows of about a month ago, not quite a month ago. It seems normal, so we'll just see how this pans out. Let's see. I'm just going to run through my exciting list here. Maybe I'll pick up some of the names. Yelp's been a good name. You had a breakout here. This is not quite enough for a pocket pivot, but it's a little range breakout and it's going higher, so that looks pretty good. I sort of dumped that in with Angie's list, which is another one of these bulletin board stocks. I think Yelp's got more going for it, though. And, Angie comes down and breaks the 50-day, but notice it holds a 65-day exponential. That's the black line. And what I've noticed is that stocks will pull down and even violate the 50-day moving average, but it seems like they hold the 65-day exponential, and then they turn higher. And so, I theorize that in this market environment, what's going on here is that basic rules like using the 50-day the crowd's seeing that, and this market is just, to me, it seems like it tries to fool the crowd at every turn. And so I think that you find support at the 65-day. It's a logical area too, because you're right on top of this little area in the stock here. And so, but this is kind of garbage. You gap up on no volume. Okay, you ever see a gap up on no volume? Watch out. And it breaks down immediately, and you want to be out of this thing, I think, and I'd be selling it in any case if you bought it on the basis of this pocket pivot right here. But they announced that they had fewer subscribers than they thought they would have in this latest quarter, whereas Yelp is more of the one, making strides and coming out with some new products. I think now they're going to be delivering restaurant food and taking orders for pickup and delivery and all kinds of fun stuff. And so I think they're a little more successful. But again, I pointed this out last week. On Yelp, what I like here is you have an IPO and then a big base, and it's coming out of the top of this big consolidation. So I think that sets up a fresh move. Much as LinkedIn, when it finally came out of its big IPO base back in January, and that set off the move higher. So that's the sort of thing I like to see in some of this new merchandise that we're seeing. Let's see. I'm going to just answer some questions as we move along, just so I can stay current with the IM messages as they're coming in. New Skin was a Bible gap up, and this one kind of got away from us, I think. It just started moving too fast. I'm not sure what happened there. But it's also a stock that's subject to a lot of news, and so I guess if you saw this, you could buy at the low here, 70.83. You're probably too far now above that to take a position and keep your risk to a minimum, because this thing is a volatile, thinner stock, and it can pull in pretty sharply. So I don't, it was a Bible gap up though. So I think there were a couple others. PCYC was also looked to me like a Bible gap up on the move here. It's also a base breakout, but it's extended at this point. But if you saw that, and it got, it sort of got up there pretty quickly, I think. The low here was 93, so you're over 10% above that. So not in a position where you can really buy it. NGVC, I'm not sure what that one is. Natural Grocers. I haven't seen this one, but it's kind of parabolic now as I see it, so I don't think it's something I could buy. I'm guessing, yeah, it trades 137,000 shares, so that's why it hasn't hit my radar screen. I generally won't deal with a stock like that. It's too small, as you all know. Here's a question, Dr. K. Given that we are not seeing the larger volume spike in stocks and indexes that we are used to, do you think we need to look at a shorter range, such as a 10 or 20-day moving average of volume instead of the 50-day moving average of volume? What do you think, Dr. K?
Yeah, I think that there's nothing wrong in this. In the last couple of years, it's been a kind of market where you want to take your profits on strength and buy on weakness. So everything's been turned on its head. I don't think there's anything wrong with doing that per se. But I also, when you do get the rare stock that does work, it tends to work very well with the 7-week rule, and that means using the 50-day as your guide, as your selling guide until. Well, it's using a combination of 10 versus 50-day, depending on how the stock trades. There are still some that have done well under that rule, but there's nothing wrong, again, with utilizing a shorter-term strategy like the 10-day to sell your position out, especially when you want to take your profits. These days, taking profits, again, the rules are turned on their head. So taking your profits is not a bad thing, not a bad way to go. And until we get into a more normal environment, that's a viable strategy.
Yeah. So I mean, in terms of, but you wouldn't use a different moving average line. Excuse me. You wouldn't use a different moving average line for volume, would you, Dr. K? So in other words, using a 20-day moving average of volume. I wonder what that would look like.
for a volume moving average, I mean, I would say that I've always used the 50. You could use a shorter term, but I don't. I mean, you could create rules around different moving averages. There's nothing wrong with that. I just find that the 50 continues to work well for my purposes.
Yeah. Okay, let's see here. What is that? Interesting waveform going by. Let's see. Some other things moving today. Let's see. Pull to the top. Netflix, you had some bottom fishing pocket pivots here. Stock going higher. Little pullback in here. That looks normal. It's trying to break out today. So will the breakout work? I don't know. We'll see, but it looks good. We've been talking about, somebody mentioned these mortgage servicing stocks. I guess those are back in play. You have a nice correction. You could get a pocket pivot here. The question is, a lot of these patterns have this big volume spike. The way I look at it is that is probably exaggerated a little bit in terms of real selling. And so I don't really look at it. It couldn't possibly be discounted when you're trying to interpret a pocket pivot. But, that's not guaranteed, because conversely, I saw pocket pivots that you could have said the buying was based on Russell 2000 or Russell Index rebalancing. So we had that occur a couple weeks ago, and on that one, the other one also was CRE occurred that day, and that there's a little pocket pivot here on the 10-day, and so you can debate whether that is skewed. I tend to think I like buying. If I see the buying volume there and it creates a pocket pivot, I tend to like it. I don't pay too much attention to the selling volume, mainly because I think it's temporary. And if you're seeing it in a stock that is a leading stock in the first place, and it's in a position where, say, like with Trulia, was trying to round out a nice base, and a much better base, I might say, than it has had previously. Here's the weekly chart on it here. So it's trying to round out this base. There are some clues. We've got supporting week here. Notice how as you come down to the lows of the base, you close above mid-range here, but the volume is lighter, so you're getting some support, some lift off the lows at the lows of the base, and selling is not picking up. So when I put that all together and I see this, I'll say, okay, was this due entirely to Russell Index rebalancing? Well, probably a good deal of it was. But is it in a position where I can test it, and I'm in a reasonable area where my risk is low? So if I want to theorize it, I'm not going to pay attention to the fact that this is Russell Index rebalancing, and it's above the 50-day right here. So on this day, the 50-day is at 30.90, and it closes at 31.09. The basic idea is if this can't hold the 50-day or at least a 10-day on a pullback, then maybe it is phony and it's not going to work. In this case, the very next day, you had a little pullback to the 50-day briefly, and then it took off and went higher, and it's been moving since then. So you know, you can get into a lot of mental masturbation as to whether the volume is real or not. To me, if it's there, I'll try it if I have a reasonable spot to buy the stock and keep my risk to a minimum. And so you can see here by using the moving averages, that's possible with Trulia. So there's another one. I got an email from somebody, and I thought this was interesting because you had a viable gap up here in the stock in Centaurus. And it occurred on a buy recommendation, and so I get the question, you know, well, should I, you know, not pay attention to a breakout and a viable gap up because it comes on a buy recommendation? And I got to tell you, a lot of times breakouts or pocket pivots will occur on pivotal days for a stock where the buy recommendation coming out of an analyst or a brokerage house gets a move going, and so what you have to do is just take it on its face. Don't try to outthink it and say, oh well, you know, it's not real. It's caused by a buy recommendation. It's a viable gap up. So erase all the news or whatever you think is irrelevant news, and just look at what the trade. And so we know that it's a viable gap up. The low is 22.48 on an intraday basis this day. And it pulls back into it down to a low of 22.76. It's pretty close, but when it gets down in there, that's viable as far as I'm concerned. And the thing turns right around and goes to a new high. So if you're sitting around there trying to, you know, jerk your brain around, wondering whether you should follow, you know, buy the breakout because it's just due possibly to a buy recommendation, just forget it. Just watch what's happening here. The price volume action tells you everything you need to know, and as long as you have your stop, which you know right here is going to be 22.48. It's your selling guide, and you come in like this. That's a nice place to buy the stock. So, watching Celgene trade right now, it's getting some lift off the lows. So, you know, it might flag in here for a few days. So I still think it looks fine. More stocks. Amazon. Well, Amazon's extended. You had a breakout here. Now here's a situation where if you're using a 6, 7, 8% sell rule on these, you would have held in because you had a breakout, it moved higher, the market corrected, and it found support at this 50-day and 65-day exponential confluence or zone in here, and found support that day. So it did pull back, but not more than, say, 6, 7%, I think, but not even close to that, more like 5, 6, from your buy point anywhere in here below 280. And now you come up and you're making new highs. So it looks fine. There's no buy points in the stock. So notice how it's moving higher today, even though the market's starting to come off a little bit. Just to give you guys a quick short, I mean, I'm already short this thing, so just be advised. Ben, I think, looks kind of interesting. You got a left shoulder, a big head. If you look at it on the weekly chart, it did have a move. It's not the greatest one, but it's moved above the 20-day, but you're getting to the bottom of this gap down day. So anywhere in here, I kind of look at, I'll put out a short just on a tactical basis and see if it breaks down, either as a way to help me sit with some long positions if I'm holding core positions on a market pullback, or just to go after it. You know, I think you see heavy volume selling 4 weeks in a row off the peak, and now you've got this flag. You would expect some sort of a reaction to the upside. So in my view, this is vulnerable to breaking down, and so if you get nervous holding some longs, you want to throw out some shorts, you could do it. Obviously, Celgene, which we had put out as a short sale earlier, saying use the 50-day moving average plus a couple of percent as your stop. Well, you probably should have been out, you know, well before it gapped up. So I think you could see that wasn't happening. But as I was pointing out in the chat room, you know, this could be a double bottom. You know, this undercuts the lows, so this could be a new base setting up as a double bottom type of situation. And that's exactly what happened. So, you know, one man's head and shoulders, here's the left shoulder, the head, and the right shoulder, becomes another man's, you know, what roundabout formation, as we've been talking about that, where you've seen a number of stocks coming up off the lows, you know, like Splunk had a little pocket pivot right here, no, wait, right here, actually, which is back on 6/21, June 21st, and that came up off the lows, off the 50-day, and has gone higher, and it's moving higher today. So a number of these have panned out. Let's see. Here's one for you, Dr. K. Are you ready?
Yeah, fire away.
Are you ready? Okay. Dr. K, in the lounge, that's the chat room, okay, we have been awaiting your return. When might that be expected? we learn so much from Gil, and our ego. Oh, my ego is just getting huge. You can probably just see it, Dr. K. It's like filling the room right now.
The bubble waiting to burst.
Look, we learn so much from Gil, and are eager to have you share some of your wisdom and thoughts with our sponge-like brains. Please come visit for a while.
Absolutely. Actually, it's funny you mentioned that because I put on my calendar for the 15th. I'll be there probably around, let's say, 8 a.m. PST.
All right. So I think Dr. K, whereas I come in during a certain time during the day, I might be in once or twice during the day. Dr. K will do it on a weekly basis. And when that happens, suddenly bright, pure white light will emanate from your PC screen when he enters the room. So there's a pretty good... I should bring this up because there's a pretty good little repartee going on. Somebody accusing me of trashing your model. It's like I trash your model all the time, don't I?
Yeah, it's fair. It's what big brothers do.
Exactly. So yeah, I do that all the time. But I thought it was interesting that I'm just pointing out that in this market environment, we have seen the model in some cases act more like an oscillator, and that's just been an observation that I've seen. So you can adjust to that by not taking such big positions if you still want to use the model. If you don't like the model and you think it doesn't work and it sucks and we're all evil, awful people, and you in particular, Dr. K, because right now I'm not taking any responsibility for your model. Okay. If it starts to work really well,
I want to hog all the credit and all the discredit.
No. You only get all the discredit. But like I told everyone, when the model doesn't work, it's Dr. K's model. When it works, it's our model. but in any case, I just want to be upfront about all that. I don't think in this environment, in terms of me making money myself in my personal account, it has nothing to do with the model. I'm looking at sort of unorthodox concepts in the market and what I'm observing, and you can do that. I don't have to. I can use pocket pivots with it too. Because you could use. You could be doing pretty well on this thing off the lows, and there's a pocket pivot, and we've seen a number of these, from Splunk to, what's another one that we've seen off the lows? There's been several of them, even the Trulia, so the tools are there, I think, but you got to take a little bit of an unorthodox view, I think, and not worry about whether the market's in an uptrend or not. I've told a lot of you on the chat room that I view the market as a market of stocks right now, not so much a stock market, and so I'm not trying to necessarily trade the indexes because that's been difficult using the model. But who knows when the next good signal is? Who knows? But as I view it, I'm focusing on stocks, and that's all I need to make money, and that's me. Okay.
I guess
anyway.
for me, the best way to put it is I've worked with the model for 23 years now, and it's I back tested it all the way back to the 1920s. I know the strengths and weaknesses at a cellular level, so I don't lose a wink of sleep when a year like 2012 comes along and the model underperforms. Buy and hold. I'd also point out that buy and hold generally is not the best tactical way to go about investing your money in the stock market. Then you got a year like 2011, which was really troubling for people, and yet the model was well loved because it managed to do well outdo the major averages. So I know the rhythms of the model. As long as I know why the model is doing well or not doing well, I don't lose any sleep. And I know that periods like 2012, they're very, very rare periods, fortunately. Where you get trendlessness that not only throws my model, but it seems to put a crimp in most. Well, there's 3 other models out there that I have any respect for, and those models have been having a tough time too. And then you got the market trend following wizards that are guys that have been interviewed in Michael Covell's books and Jack Schwager's books, and these guys are tracked. Their performance is tracked, and these guys were down collectively in 2011. And double digits collectively in 2012. So I know that it's a very tough environment. I think a lot of people understand that. And the question is, when did this difficult period end? And in the meantime, you got pocket pivots, you got viable gap ups, you got other tools of the trade, short sell setups that you can utilize. I'm still utilizing the model actually because I don't, like I pointed out, a new uptrend could start. And it can become very difficult to get on board, especially, say, in 2009, where the model went to a buy signal in March, and I didn't believe it. And the market went much higher than that, and it's very difficult to get involved if you miss. So I prefer to have some of my capital involved in the model at all times.
Yeah. Okay. So I was theorizing that you could have been walking around in a sort of a stumbling about in a catatonic state because the model, was not working or whatever. But I guess that's not the case then, huh?
Well, never has been.
Okay. Let's see. Let's go through some other names real quickly here. Warner Chilcott. Yeah, everybody's pointing at this one. It's a buyout, so this is the high tide buyout flag. So not anything we're paying attention to. ACAD is just hanging along the 10-day moving average. Watch for a pocket pivot type move. This is the Russell rebalancing day right here, and so I don't know if you count that, but let's see. Now you are 1, 2, 3, 4, 5, 9 days away. So maybe in a couple more days you're set up for a pocket pivot, or maybe you could just buy it here with the idea that it should hold the 10-day moving average. So I mean, it looks okay to me. It just looks to me like it's trying to set up. So let's see. Next one. Illumina long. Well, if you're long it, that's fine. Had the viable gap up, so it's never violated that. It got some support off the 10-week moving average. So that was after this breakout. That was the first pullback to the 10-week moving average, and it's holding up. So it's just fine. There's really nothing to think. It's trying to break out to a new high today, but running into some resistance. But I think that's logical in this position for a number of stocks. So I wouldn't really make too much of it one way or the other. Valero. This makes me think of that old Valero or whatever it is, that song. Remember that? I'm probably dating myself. This thing's a dog, so I'm not touching it. I don't really see anything yet in terms of a bottom fishing pocket. You undercut this low, maybe that's resistance, but I'm not a buyer. So, maybe if you saw a nice pocket through the 200-day, that's another story. But this is a tough one because the 10 days below the 200-day, which is below the 50. So I don't know. That's not something I really mess around with. Round trip on RH. Well, it's a thin stock, and I think something runs up like that. Yeah, and it's been holding the 10-day pretty well. Probably as soon as it starts to break down through the 10-day, you could consider taking some profits. But it's a thin little stock. It trades 500,000 shares, a little more than that, and it can be very volatile. It's also in the group, and we've been talking about it with Ella, which is actually trying to turn around, but it's in the building-related group. And you notice you see some of these. I'd watch some of these too because I heard that the housing thing is starting to slow down. And there was a guy on TV yesterday from Las Vegas talking about how there's all these foreclosures that are off the market. The financial institutions have foreclosed on them, but they're holding the properties and not putting them on the market. So that's created an artificial bump in new home building. And so I think that that confirms what we've been talking about for a long time, is that the lack of foreclosures or the follow-through on foreclosures, either being houses where people are living in them and not paying their mortgage payment, and they've been getting away with that for 2 or 3 or 4 years or more, has created a distortion in the supply of houses out there. And so here's Ryland right up into 50-day or the 65-day exponential, which to me is one area that I'll look at shorting in stock. DHI is another one, up to the 65-day exponential as well. So I kind of look at these. These are the different areas: the 10, 20, the 65-day exponential, the 50, where I might look at shorting a stock, and you can see these are doing that. And you'll notice that if you look at the weekly chart, so look at DHI, here's a head and shoulders. So you're pushing up right into an area where it could easily be a right shoulder. So I'd keep an eye on that. There's DHI is looking that way. I think Lennar is another one looking the same way. Yeah, and notice it doesn't even get to the 65-day exponential. So some of these, I think are looking a bit on the cheesy side on these rally attempts. Probably, trying to figure out which. I'm going to have to look at these over the weekend, but they're all looking pretty grim, and you got a logical bounce thanks to Bernanke babbling about QE is here to stay. Anyways, but I think that all speaks to this, and I think this group is not an area I want to be in. I noticed Fortune Brands trying to come around, but these look, I don't know, these don't look right to me. And even the NSM, I was looking at that, I was talking about these. I guess maybe that's a little better, but you're not seeing any pocket pivot type volume or anything, so I'm a little wary of these stocks. But they are trying to recover because the whole market's moving now. Would you buy a BGU like NUS? I think we already talked about this. If you missed it in the next few days, well, maybe if it formed a tight flag over the next several days, or if you had a pullback closer to this area. But I don't, like I said, I wouldn't buy it up here. It seems more Uh, seems too risky. Okay, let's look at some others here. AFOP. These got to be thin names because, yeah, 251,000 shares. Alliance Fiber Optic. That's getting a little bit on the parabolic side. So, you know, I don't know. Keep your trailing stop in there. I'm not a buyer here, obviously. FRGI. Fiesta Restaurant Group. Must be Mexican restaurants, huh? But would Mama Morales approve? That's all I want to know. Well, they got good earnings growth. 2013 looks like they're going to grow earnings 108%. The restaurant group right now is number 13. So, you know, 98 relative strength. Looks like they're hanging along the 10-day moving average. So I think what you want to look for here is if you got a pocket pivot after this decline off the peak. So thinner stock though. You know, finding support at the 10-week moving average, but it's already done it once. So this is a second time. So usually less reliable. But again, I think just watch for how this acts. I don't know. You could say it violated. I haven't counted this. As 1, 2, 3, 4, 5, 6. It looks to me like it's held the 10-day moving average for about 7 weeks. So I don't know if you'd be using. Hey, Dr. K, would you use a 10-day on this as a selling guide? I'll have you weigh in.
Well, let's see. I mean, what it basically it obeyed the 10-day for, you know, at 7. Let's see. Yeah, it obeyed it just for long enough.
So it violates it here. It looks like, and but then it finds support and it you know, chugs
Yeah,
back.
although that's a weird kind of wedging pattern that it's tracing out.
Yeah, it's kind of funky. So you know, I don't know. It's acting okay. I mean, I think you just got to watch how this acts. If it violates the 50-day at the very least, let's say you bought it way down in here, then you get a nice cushion. If you just recently bought it and it broke down on you, then you better start thinking about controlling your risk. Somebody asked, in Celgene now, would you use the intraday low of the BGU day or the O'Neill 7% rule? Well, I mean, the whole advantage of using a viable gap up in the first place is that if the thing holds in tight on the viable gap up there or near the low, your risk is pretty low. So, you know, you're buying this thing anywhere in this range and you're within 4 or 5% of getting stopped out or of this low. So I think it's better to just operate on the basis of the BGU rules rather than using a 7% stop loss. So that's how we would do it. Workday, we were looking at this one earlier in the chat room. I've been watching this, and I hate this stock though because it's really volatile, but it's holding along the 10-day. Looks like it's going to try and engineer a pocket pivot if it can hold up, but you know, it's kind of a crazy stock and not really tight. You know, on an intraday basis, it's pretty loose stock. So, you know, but it might be pocket pivot. If you like the stock and you want to buy it, go for it, you know. Some of these comments, somebody up tells me to be easy on Dr. K. He is a high consciousness person.
Well, that's very sweet.
I'm a no consciousness person. I'm an unconsciousness person.
Yeah, but I say what doesn't kill you makes you stronger. So you know, bring it on. It's all good.
Hey, I did drugs in college too, so I have a very high consciousness. Let's see, Dr. K, did you say 8 a.m. Pacific time for the chat room on Monday?
Well, I'm glad you brought that up again. I mean, I should never make a critical time because my day shifts and morphs. So let's just say it's going to be somewhere on Monday after 8, sometime after 8 a.m. PST. So that could be 9. In other words, it's when I have an open opportunity, I'll hop in.
And I should point out, you know, here's a good comment on the chat room. If you're not in the chat room, you're missing 50% of your subscription money. I'm going to say value, because you're really missing 100% of your subscription money once you paid it. But you're getting only half of your money's worth. That's what I think they mean. There is so much information, help, and ideas shared. You are missing out. We have lots of fun making money, and now we have a commitment from Dr. K to be there. Hey, we're going to have to raise the price on that. So get in there and participate and make some money. I'm down with that. So I like to hang out in there. Sometimes it's just fun, ridiculous banter. There are even some lady traders in the chat room. So watch your language. Although I'm sure they don't mind if they're traders, no matter what, regardless of what your gender is. Let's see, VRX, held tight along you had two pocket pivots in here that's centered around that secondary offering, if you guys recall. And it pulled back in with the market, so it bottomed on this day and it held tight. Now it's moving higher. So it's rounding out a cup. Now, again, if you bought it along the 10-day when it was tight in here on the basis of these two pocket pivots, now you're coming around. This is another example of where you're pushing the highs or up against the highs. So it's logical for the stock to pull back. So Silica Holdings, to me, this one's trying to round out. If you study the weekly base, notice how you've got a heavy volume week here. You close in the top of the range. You have these 2 weeks here, and you're closing in the mid to upper part of the range. So the way I see it, the stock is getting support along the lows of the base, and I bet you it comes around. If the market continues higher, we get an upturn in the market, it's going to go with the market. Right now, you're above the 50-day moving average. You could have said, if you don't count this day, because this is Russell Index rebalancing, you could have said that doesn't count, and this is a pocket pivot up through the 10-day, but you're below the 50-day, so it's risky. But again, these unclear situations, I would look at the weekly chart. So to me, the weekly chart tells me that it's trying to find some support in here. It's closing in the upper part of the weekly ranges for the last 1, 2, 3, 4, 5 weeks before this week. So it's acting okay. So you could have tried to buy that, and that might have worked, and it's moved higher. Now you're looking for a new buy point in it, but it looks okay. And since I consider it a quasi-cousin stock to Bonanza Creek Energy, which I've talked about as potentially trying to find a low, notice here you closed near the peak of the range, the weekly range on heavier volume, so you had some support. You might say it could be an improper double bottom or a cup with a deeper handle. I don't know. I would say the problem here, though, is you're coming up near the highs of the base. Let me see if I can make this a little more. Coming near the highs of the base, so you're in a position to pull back. It's a thinner stock. It trades 231,000 shares. For my money, I like trading this Silica a little better. It's 1.3 million. It's a little more liquid. So it acts. These are possible turnaround situations where their building bases could come out. In Vensense, I think it's just a pile of garbage. No, it's you had the viable gap up, it failed. So you get a pocket pivot, it's holding up, holding the 10-day moving average. I suppose it's fine, if you want to hold it. I've found other things that I think are moving faster, so I prefer that, over Vensense. So one thing I don't like about this is the stock's acting okay, and it's trying to build a little handle here, but it's really not pulling back yet, so it hasn't built a handle yet. We're going into earnings, so we'll see what happens then. But it was disclosed that they are being designed into the new iPhone, and I would have thought, and it caused this move, but I would have thought it would have been a bigger move. So it's sort of inching higher. Kind of reminds me now of Ambarella, which had a pocket pivot yesterday, but this stock, it's very... Notice how it's been kind of loose in here, but it is tightening up, and I think that's working in its favor. Maybe that's telling it's going to have a good earnings report and it's going to move. These guys make video chips, and when I think of video chips, I always think of my old flame from the 1995 C-Cube Microsystems, which made MPEG decoders and other video-related chips, and that was back in the 95, the infancy of the internet. So. Somebody mentions that Restoration Holdings having a secondary offering priced at 70. So it's got some supply to absorb, and that's what that looks like. So maybe it's okay. But again, if you own it, there's your stop, I think, at least. And so maybe it pulls in on the secondary. Maybe it's viable. But again, I'm not so necessarily clear. I'm hot on this group right now. Carry On Networks. I looked at this, and I saw this thing come down here, and I thought, okay, I should be buying this, and then the next day it gaps up, and it's trying to build a new base also. But it's a little bit of a volatile stock, Israeli stock, but good numbers and trying to come up. But it's now holding the 50-day moving average. To me, this is a little steep for a bottom fishing pocket pivot, so I'd maybe watch it go and see if it holds along the 50-day, and maybe there's a new buy point in there. So, what do you think? Pocket pivot on CSTE. What do I think of it? Let's see, on 7.8, 7.10, that would have been here. What is this company? Why is this not? Oh, I see. Is it a Caesar Stone? What is this? Well, it's trying.
That's an interesting building.
It's an Israeli company manufactures high-quality engineered quartz services used as countertops. So it's like an Israeli building stock, I guess.
Yeah.
So I don't know. There's a pocket pivot there. If you bought it, you bought it. So now what's your stop? You know, the end of the story. I don't know what I think about it. What is your definition of a thin stock? It's something that trades just a few hundred shares a day. Like usually less than 500,000 in most cases. You know, unless it's a $200 stock, that's a little more liquid. But Proto Labs. Just hanging out. You know, the stock's had a sharp move up this at the low. It's been consolidating. It tends to be a volatile stock. You look at it on a weekly chart here, and you can see it's closed in the upper part of the range. You're not getting much selling up here, so it maybe needs to go sideways going into earnings. Melee, Mercado Libre. I've been thinking this one is trying to round out a new base. You know, you had a viable gap up here, but it was a little extended. But this is volatile stock, and it tends to be all over the place. It's somewhat thin, 607,000 for $100, and that's not too bad. But that's still only what is that in terms of dollar volume, Dr. K? Like 7-8 million?
Yeah, and that's generally, well. Let's see here. I mean, you got 600,000 times about 100, so. You know, that's actually quite that's pretty liquid. Are you talking about MELI, right?
Yeah.
That's what I see on my screen. So that's liquid enough.
All right, cool, good enough. Okay, Dr.
But
K.
yeah, I generally go with daily dollar average volumes. So if we're in a small cap favored environment, I might buy stocks as little, trading as little as say $10 million dollars a day, and but in the environment we've been in the last few years, I mean, it's been much more of a stable, steady, bigger cap environment. So then I might go as low as say 16 million, 15, 16 million. But everything has to really measure up, and the volatility in the chart also has to measure up, because a lot of these thinner names are quite volatile, and there's a lot of noise in the pattern. So those are stocks we'll tend to avoid.
Here's one. Taminco trades 63,000 shares a day, so not one I'm playing. I mean, I don't even see any. You're up there as IPO, I guess. Done okay, I guess. But it's a thin stock, so I'm not into it. Somebody says, "Don't." That must be Vegas Trader saying a comment. Don't you worry about the language. LOL makes it more fun for me. I'm assuming Jody, that's your woman, and you are Vegas Trader, but maybe not. Maybe you're another woman who's on there. But it's good to know there are some women out there who are on the chat room. So it's just, I notice it does. There is a little bit of a locker room smell in there when I go into the chat room, but hopefully getting more women in there is a good thing, or having a few probably counteracts that odor. So I noticed that my daughter's room smells like perfumey. My son's room smells like a locker room. It smells like an old pair of gym socks. It's just interesting how that one works. Anyways, Jazz pulling back to the 10-day. It's been acting fine. So no real selling signal here. No real buying signal here. Goldman Sachs. Straight down and straight back up. So, stock had a nice move, so maybe it's building a new base. Who knows? Not really a pocket pivot here. So, no real buy signal. It may just be building a new base. So, that's all I see really right now. Not something I want to buy necessarily right now. BA, Boeing. Nice break. What happened to Boeing today? Any news there? Anybody know? Let's see. Dr. K? What's going on? Let's check here.
Let's see. Well, we've got.
Was there?
There was a fire apparently.
Fire on in London. Dr. K, were you playing with matches again?
Heathrow Airport.
Oh, okay.
Interesting.
Yeah. So that causes a stock to break. I don't know if it's a failure on the plane caused by the manufacturing or faulty manufacturing or something like that. Then I can see why that creates an issue for the stock. I don't know. It's not a stock I've owned, so I'm not sure what you do on this. But they're hitting it pretty hard. I guess it really depends on what is your stop for the stock. So Dreamliner Fire. So let's see. Tango. Wango Tango. Yeah, there she is. Tango. I hate the stock. Tried playing it, way back in here when it was an IPO. Now here's your position in here. I'm not so sure this is something to play.
That's a bottom feeder.
Yeah, and I mean earnings and sales aren't bad, you know. 67%, 113, 62, 67, 50, 100, 167, 200, 200, 500, 400. I mean that's going back several quarters, and next quarter up 60%.
Yeah, and the industry group ranks 11th, but still, there's more risk.
Still, yeah, it's something's not right here. This thing should be on fire. Anyways, where are we? SHW. Wait a minute. Well, I'm going to do SHW first. Sherwin-Williams, painting stock. I'm not into it. Do you call this a pocket pivot, gap up thingy? I guess it could be. But I'm still wary of these housing stocks. I think that area, just the whole thing is an area that's sort of flagging and lagging, and I just prefer to be in other places right now because those are the places giving me much more love, I might say. You know, like Tesla, like Solar City, like SunPower, any of those. Even today, First Solar coming in a little bit now, though. But again, remember I was pointing out it could find some resistance at the 50-day. You want to see the pocket pivot push it through. So maybe market sells off during the day. Maybe we rally into the end of the day. Maybe not. And then it comes out. And so then it might be viable in that case. If you're in it already, if you're in the chat room, you bought on the basis of my discussion of the stock, you know, using the lows here as your stop, then you might be able to hang out with it or a core position and see if it does play out. If it does pocket pivot on a bottom fisher, you could add to your position, I suppose. Comments on GMCR, holding the gap up, but under the 50 DMA. Dr. K, what's your take on Green Mountain Coffee Roasters?
Well, it hasn't violated. Well, it did violate the 50-day actually yesterday. So, you know, I don't like this one. When it violates the 50-day, you know, you don't. It had the gap up, but it's not acting right.
No. Notice, however, it's trying to hold the 65-day exponential, but right now it's not quite doing that. It doesn't look. I mean, I wouldn't be trying to buy this. You need to see something constructive, but it seems to just be rolling. Somebody says we need to add a sound component to the chat room so the lounge lizards can enjoy some of Dr. K's piano music and Gil's blues riffs on slow market days. Also, is smoking allowed in the lounge? Only medical marijuana is allowed in the lounge. So any other forms of smoking are not allowed. So ATHN, Athena, that's my healthcare plan. They suck too, I got to say. They don't pay for anything. I'm not sure why I even have it. But a gap up, I don't know. Is that a viable gap up, Dr. K?
Well, technically, yeah, it's.
Oh no, that's not my. So that's. Uh-oh, Dr. K, you're right.
But there's some things. I don't know. There's a couple. The industry group ranking is very low. Let me just look at this one a little more carefully here. You know, if you bought it here, your risk is pretty low because you sell it on an undercut, 1 to 2% undercut of today's low. But I also don't like what it did on the earnings period, just the last quarter.
Yeah, I mean, if
it
you
lost
buy it,
nearly 10%, and it had prior gap downs too. So there's something wrong. Yeah, my gut says there's something wrong with the pattern. On closer inspection, you've got some serious defects in the pattern. So I'm not sure if I'd be jumping all over this gap up. I don't know if I'd be calling it a viable gap up. I think there's better stocks out there in this environment.
Yeah, the only thing I would say is if you really want to trade it and you think there's some story here you need to be paying attention to, well, you buy it and your stop is 103.35, 3% lower. So there you go. Maybe you add another 2% for porosity, but in this case, maybe just give it the low of the gap up day. If you think it's a buy, you don't have to. We don't need to bless it. Maybe it works, maybe it doesn't. But we wouldn't buy it. That's all we're saying. I wouldn't. Dr. K.
They got to deal with this company called Ascension, and some of the analysts like the deal quite a bit.
Right.
So on that basis, you could say, well, now the company's going to be more profitable going forward. Therefore, it deserves this viable gap up. And the prior earnings periods of weakness are a thing of the past. You can rationally say that. So, you could take a position, but I wouldn't. I still say there's better better stocks out there.
Yeah, yeah. Okay, we're getting to the end of our program here. I should mention Athenahealth. That's a computer software medical stock, not a. I was thinking of Anthem Healthcare. See, sometimes I don't even pay attention to what I'm reading, so that's been a topic of discussion in the chat room. Anyways, that's kind of what we're seeing. But like I said, you can see where the market is, and you're in a position where you may not necessarily maintain all this momentum. You may need to pull back and see how that acts. And I wouldn't pile in. I'd be trying to be opportunistic on pullbacks and buying strong stocks on pullbacks into logical areas of support. I think that's worked better in this market. And if you're heavy in something and it streaks up, runs into the logical area of resistance, like I was telling you on LinkedIn, for example, zoom straight up to the peak. Looks like you might have some resistance. You could sell some or all or whatever. Truly, stuff like that, where these are coming around. Nobody asked about Triple D or SSYS. I think these things are just waiting for earnings, or at least Triple D is. Stratasys is, you have this trend line breakout. If you draw a trend across the tops here, trend line rather. You have this trend line breakout, and the best way to buy this is on a pullback. So buying down to the into the 10-day would have worked, and the stock's hanging out. And my guess is they're going to hang out until they get through earnings. So it's not like you got to get all excited here and start buying these up, but they're acting okay. They're also in late stage or later stage basis. So I don't think I'd want to own them into earnings. That's my general view. Somebody says, and I'm going to go through a couple more questions. NetSuite, you have a little continuation pocket pivot here. It looks like off the 10-day, so that looks okay. That's acting fine. You're a little extended from that now. Dr. K, someone asked, you seem to have a longer-term outlook. Is that correct? Are you buying stocks here?
I'm not buying stocks unless I see something really worth buying, because it's been a very tricky environment. My longer-term outlook is that in terms of QE3, it could definitely prop the markets higher in this continued uptrend. So my longer-term outlook is out to a number of months. So far, we are in an uptrend, a longer-term uptrend, and there's really no signs that it's going to be derailed. Even though Bernanke said he's going to be slowing QE, but there's no evidence that that's going to be happening anytime within the next couple months.
This is true. Let's see. I'm trying to. Yeah, and here's your longer-term uptrend. Since the low in 2009 here, this is your long-term uptrend with corrections along the way, and I don't know, you're looking a little steep here. We'll see how this pans out. But again, like I was saying, I'll just close with my view. Okay, what just happened here? Oh, there we go. You're in a position here where I don't think you want to go hog wild buying everything on the planet. So just try to be opportunistic and don't get carried away here. Even though we're in a nice uptrend, but we could pull back. You're in a position. So I just watch out for that. And that's really all I have. Anything else, Dr. K?
No, I think we're good.
All right. So we'll see everybody in the chat room, and we'll talk to you later on. All right. Take care.
So long, everyone.